Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the sector. So we had a bearish reaction to the market with the Trump-China trade deal stuff, and the market today said, we don't care. And the bulls bought the dip very significantly. The MJ sector, the bulls bought the dip very significantly. And we're going to be looking back up towards all-time highs in the S&P 500. And we'll see if the sector bulls can continue holding on as well. We have a bunch of names that are looking for their daily high or lows to be set. CGC, Hexo, OGI, Curaleaf, and a few more. And let's see how everybody did. For me personally today, I didn't do a whole lot of action. And I talk about how my trading style has changed. Where I'm at right now, I'm in conservative preservation mode. And I keep adding on to it. Last week, my account hit multiple all-time highs, and it hit all-time highs today as well, thanks to CVSI. I didn't buy anything today. I just scaled out of some positions. I sold some CVSI, sold a little bit more of IAN, but other than that, I didn't do any buying. So when I say that my previous self, back in the day before some significant gains took place, would be more aggressive, and people ask me, what do you mean by that? How would your trading style be different? This is a perfect example. I am very comfortable with where my account is right now. The high risk, high reward scenario, keep in mind that risk and reward is always inversely related. So if there's a higher risk scenario, that's a reward potential opportunity. The higher risk today was buying a gap down open. The difference was it's not your standard gap down open, it's a market-wide gap down open. We know things can get more extreme when there's news behind it, and we had a lot of fear in the market Sunday night into this morning before the bell rang. If I'm looking to play aggressively, I'm looking to buy these gap down opens. If I'm looking to preserve my capital, I'm not looking to buy these gap down opens. I don't need to risk capital to look for more gains after a very successful week last week. If I were looking for bigger gains and we're really trying to blitz this market, I would have been buying the gap downs today. So congrats to the bulls that did buy the gap downs. But just as a comparison of aggressive compared to conservative, me being conservative did not have me buy any positions today because of the unknown first thing this morning. After the first hour of trading, it was very clear that bulls could breathe a sigh of relief. But as far as the initial entries in the first 15 minutes of trading, that is where the aggression comes into play. So CGC broke support of 47.22 and didn't see much follow through at all. We dropped down to 47.01 and then saw a significant bounce. I'm looking at this pattern of a lower high every day, 4 days in a row now. Bulls want to come out swinging first thing tomorrow and break 49.28 to break that pattern. If we do, that will give us our daily higher low. Our key resistance is going to be up at 52.74, and we're going to look for a daily lower high to be set. If we get that follow through, we'll look for the lower high to be set Tuesday or Wednesday, and for a tightening daily range to form for the rest of this week. The bulls would be pretty pleased if we could stay within this range and see a bit more bounce of follow through. Ideally, breaking $50 tomorrow would give the bulls a lot of confidence and would keep the bulls pretty strong overall. But as of right now, 47 is the line in the sand for the bulls to hold as the daily higher low. Cron is trying to change the daily trend. 1547 was the low. make that 1767 was the high. Here's the bulls trying to form their daily higher low. For the bulls to prove it to us and to prove that this weekly candlestick or this weekly pattern is not a bear flag, which it currently is set up to be, we have to see a break of 1767. That will be a clear and definitive daily trend change that will give this weekly bounce follow through to negate the potential of the bear flag. If this daily bounce just gets another green day, or not even another green day, if it just lags out, can't break $17, and then we drop back down under 16, the odds of a weekly bear flag will increase again. So a close near the high of the day, bulls need follow through, and we do have a tightening range on the daily between these key levels. ACB was the most impressive dip buying out of a major name on the Canadian MJ side of things today. Curaleaf was the most impressive out of the major names on the US side of things. But look at this dip buying opportunity. A 10% bounce from the lows. We came down, we broke support, we flushed and triggered stop losses instantly. We filled this gap at 825. Look at how quick this dump lasted. Just stops triggering, and minutes later, we were up a significant percentage from that low. So the daily time frame, we know we still have clear resistances. 937, we'll say anything under that is a daily lower high. And the hourly time frame is a bit extended here. We're trying to see an hourly bull flag at the end of the day, but just be aware that for the bulls to break 937 from where we stand, we would have to see things get extremely extended with a significant amount of bull volume. If that's not the case, if we see this bounce top out and an inability to break 937, we'll need a daily higher low compared to 815, and then we'll need a daily trend change with a clear higher low and higher high, something which we have not seen on ACB. When's the last time we saw a clear daily higher low and higher high? It was right here in March 13th. So essentially 2 months, 7 weeks where we have not seen a daily higher low and higher high. That's what we need to see on the ACB bulls, or for the ACB bulls, to change the trend convincingly. APHA gap down open, buying of the dip. Again, this is just a small short-term oversold bounce, nothing meaningful. Show me a bull day with more than 6 million shares traded, and I'll start paying attention. But anything under 767 is just a daily lower high at this point. We need a clear daily trend change. If we get it, we're just looking for a weekly lower high. So worth keeping an eye out, but need a daily trend change is step number one. We haven't seen 2 green days in a row on APHA in a month. Time for the bulls to prove something. And we have to be skeptical of the bulls because they have not proven anything in quite some time. OGI. So we're scouting for OGI to give us a daily higher low. Look how similar this setup is to CGC. We broke support of 947. We only got 6 cents of follow through, and then the bulls bought the dip. So there's OGI, there's CGC. Little bit of a difference, but the inside bar broke bearish. We broke the low of Thursday, but not by much, and we closed strong. Pretty similar. Not as strong a close, but pretty similar. So the bulls want to see a break of 972 tomorrow to convincingly set our daily higher low at 941. Our resistance is then 1037. If we can break 972, we'll then look for a move up towards $10, but we will anticipate that this daily range will tighten up for the week. Need follow through tomorrow for these bulls to be confident that our daily higher lows have been set. Hexo, again, same thing. Only difference is we had a very clear double bottom on the US side, 925 to the penny. So again, same thing, broke the inside bar bearish, didn't break the low of Thursday, but very similar setup to OGI and CGC. Lower high every day the last 5 days. Bulls need to break that tomorrow with a break of 780. If we break it, our higher low will be established, and we'll be looking up at the top of 840. If I'm looking to compare these names that have daily higher lows that are looking so similar, what's the percentage move needed to get back up? Pressing all the wrong buttons. What's our percentage move needed to get back to our key resistance from where we closed today? I can see it's 8% or so for Hexo. I can see for OGI, everything's freaking out. Breathe, trading view. Little bit less than 8%, pretty much the same. And what does CGC need? About 7%. So they're all so similar, but if we're going to, write them down and be scientific about it, CGC is the closest to a continuation move. OGI is number 2 and Hexo is number 3, but they're all very similar. TRST, if we break this inside bar bearish with a break of 785, the odds of a daily bear flag are pretty high. If we break it bullish, which is more likely because of where we closed, if we break 806 and 824, there's a gap to fill at 850. So the bulls really want to see follow through to try and negate this potential daily bear flag. And with no range set today, we need a volume spike and a break of 2 resistances tomorrow to try and alleviate the bulls' concerns a bit. Because right now we know TRST has been struggling big time, and we are just looking for anything under 1024 as a daily lower high. So still very much in a downtrend for TRST. LABS still tightening up on the daily time frame. Equilibrium forming, and we did not set a lower high. I'm not going to consider the top of Friday a lower high, and the reason for that is because it was a gap down open and we're still pushing upwards. So I'm still saying we have not found a lower high compared to 632 just yet. You can make the argument that 587 is a lower high and we just formed a higher low at 533. I just don't like that setup because of the way that we opened. It wasn't a clear, distinct pullback. It was because of how we opened that's shaped that way. So if we look at the 2-day chart, equilibrium is very clear, and we haven't set the lower high compared to 632 yet, and that's what we're keeping an eye out for. So tightening daily range on labs, we will anticipate a break probably towards the end of the week, and if not, certainly early first thing next week. Volume continually dropping off. We'll know the break has taken place when there's a volume spike associated with it. VGW, daily support level clearly established with the bullish engulfing candlestick breaking the lower high every candle pattern. We've got our support now down at 386, and our resistance is up at 490. We technically broke support by a couple pennies, but if the bulls can get back up in the upper $4, they will certainly forget that fact. But what's our resistance? How far are we from that top? 13%, so not nearly as close as the other names that we just looked at, but VGW is much higher risk, higher reward, and faster moving. One thing that we do have to be cautious of is a head and shoulders pattern. Here's the left shoulder, the head, and if we top out here and then fade back down towards 386, we would have to be cautious. That would be a red flag. So again, just another name where the bulls want follow through tomorrow and another green day to try and negate the possibility of that being a right shoulder in that pattern. This is the 4-hour time frame. Oils, inside bar, break is imminent tomorrow. We've got a tightening range. We need to see a volume spike associated with the break if it does occur. 72 and 73 are the most important supports for me, and most important resistance is 77 and 81. And expecting a break tomorrow because the range was so tight today. So just a standard equilibrium shown as daily inside bars. Break imminent. If a bull break, we're looking at all-time highs. With a bear break, we have to form a higher low on the daily compared to 60 cents. There's your Curaleaf dip buying. Very significant daily uptrend maintained. We had a gap at 1374, and that hasn't filled by a couple pennies yet, but we came close to filling it. We have our higher low. Anything above 1274 is that higher low. Held it today with a higher low of 1380, and now we're looking back up at the all-time high. That being said, this is the kind of pattern where, say you didn't buy the morning week open, and then 2 hours later you're saying, oh man, we're running towards all-time highs, I need a position. You look at the hourly time frame and you say anything under 1519 is just a lower high. I don't need to FOMO in here. We're not just going to shoot straight to the all-time high with no news. We're going to need an hourly higher low and cool things off. We did not break 1519. Now we have to form a higher low compared to 1380 and then see the bull break of 1514 and 1519 at the same time to be looking back at the all-time high. So it's a bit of an inverse head and shoulders setup that the bulls are going to be hoping to follow through with, and bulls are going to be looking to enter on an hourly higher low tomorrow. C-Web is still extremely tight. The most important levels for me remain 24.94 and 27.20. And we're just patiently waiting for a break. The bears have a slight edge here as we head down towards support. Another name, haven't seen 2 green days in a row in almost 3 weeks of trading. And the bears, let's see, to break support of 24.94, we need about 81 cents of downside, and to break resistance, we would need about $1.45. So much closer to a bear break than a bull break, and if we get the bear break, further weekly consolidation is needed. Keep an eye on these exponential moving averages on the weekly 12 period here coming into play even if we break bearish. It's a scenario where if we broke bearish and bounced right off those weekly exponential supports, it would be the kind of scenario where we quickly look in the other direction for the bulls to form that weekly higher low. TRUL had the gap down open, breaking some supports, but obviously no follow through for the bears, and we actually broke resistance of 1792. Next resistance after 1810 is going to be up at 1850, and if we look at it on the 2-day time frame, equilibrium still stands. High, low, lower high. We'll call our higher low now 1696, and we're looking for a lower high compared to 2064. So some of these time frames are more clear to me on the 2-day chart, a little bit more choppy on the daily time frame, and that's why it's always important to scan around different time frames to see what is most clear to you. IAN, bulls buying the dip, need to see a break of 657 tomorrow. I have scaled out more of my entry from Thursday because I was just looking for a lower high to form. Today was a setback, and still have a core position where if this pattern were to break bullish, I would benefit, but the intention of my entry looking for the daily higher low on Thursday was just a short-term trade, which ended up working out. Not ideally with the open today, but still got some profit locked in. So from here, if the bulls can break 657, we'll stay in this tightening range. If we can't break 657, it favors the bears, and we're looking right back down at 609 support. We have to be more skeptical of the IAN bulls than we are on other names because it is not in a daily uptrend, whereas a lot of other USMJ names are. HARV, daily time frame right on 1049 support, held it by 6 pennies. So grinding this support level, but we have a double top at 1140. Bulls have to break 1140 for us to be confident that the double bottom can hold, and then we would look for a lower high somewhere in the $12, $13 range. But it's up to the bulls to prove it, and they're not proving it right now. Have to break that double top of resistance tomorrow to see follow through to stay in this pattern. OH on the daily time frame, anything above 1077 is a higher low. Still a lower high every day for the last 4 days in a row now. Bulls need to change that pattern. And again, another one where if you look at the 2-day time frame, it's much more clear for me on this range. So OH bulls need to change the hourly trend. Haven't done that yet. Bounce came right off the low today. We need the hourly higher low and follow through tomorrow to confirm the hourly trend change to give us our daily higher low. And CL needs the same thing. Looking for a daily support level to be established, have to change this hourly trend to give us that daily higher low. And again, if we look at the 2-day chart here, very similar. We did get higher highs, and now we're looking for a new higher low of support to be established. GTII, haven't been covering it a lot lately because volume and liquidity is not great. We're also in a weekly pullback now. We've lost the weekly uptrend. It looks like a monthly equilibrium. With our high, low, lower high has been set. We're looking for a monthly higher low. Essentially, the reason I'm not covering it is there's so many other setups. A lot of them more bullish, but there's also a bunch of setups that look like this as well. And I'm not trading GTII, so I just don't care to cover it is the real reason. ZYNE, extremely impressive day today. And we saw it pre-market with where we were set to open. And if the bulls can break 1306, it will just be another daily higher low and higher high. The increase in bull volume today did a lot for these bulls. Hourly bull flag at the end of the day, we held 1251 as a short-term support. Bulls want to break 13, holding 1251 first thing tomorrow, 1306 to be exact. And that would continue this move. If we fail 1306 tomorrow morning and then break 1251, we're staying in a tightening daily range. And if we break 1306, the next resistance is all the way up at 1389. Very impressive 30% bounce from consolidation just 2 days ago. CVSI, so got the bounce. And again, go back and watch the video from the weekend where I talk about the psychology. This is a pattern and setup that I use to take short-term trades when earnings are approaching. I do it on Tesla and Apple and all these major stocks. It's a clear looking the other direction setup. If we're very extended in one direction heading into earnings, we anticipate that profit is going to be locked in and people are going to be looking in the other direction in the couple days, the day or two leading up into earnings. So we had the pullback with 9 red days in a row. We have earnings on Wednesday and we get short covering and bulls buying what they feel is a discount. So from the low of today to the high, we bounced about 9%. I scaled out taking profit in the 5 teens and then 520 and locked in a very quick 3+% from the entry on Friday. And again, it's just that same style of looking for a short-term bounce, locking in profit quickly. You know, I could have held on and seen more gains at the end of the day and into the 530s, but I could care less about that because my trading game plan, lock in a few percent for the bounce, get out before earnings, and I know my window is short in terms of how much time before those earnings, so I'm pleased with that trade. Anything on the daily under 584 is just a lower high, and we'll need a bullish reaction to the earnings here to give us our clear weekly higher low of support and try and head back up into the upper $5 range. That's where we stand in the sector overall. Huge correlation between the S&P 500 and CGC today. I have no doubt that if the S&P 500 topped out in the first hour of trading and faded back to the low of the day, we wouldn't see anywhere near as much strength in this sector today. So always keeping an eye on the S&P 500. And as far as the summer lulls go, everybody talking about it. If the S&P 500 continues to grind to all-time highs as it did in the summer of 2018, the MJ market's going to stay just fine, in my opinion. And the MJ market had big bull volume last summer and headed to higher highs and was very strong. And in my opinion, that's due to what the S&P 500 was doing. So if we are strong in the S&P 500 this summer, there is still money to be made for the bulls in the MJ space. And we're going to continue watching this narrative very closely between China and the US. If we get a deal, we're going to all-time highs. There's no doubt about that. Question is, how much follow-through can the bulls see? And right now, going with the trend is the way to do it. That's that. We'll end it here with a video about hustle and motivation and being ahead of the herd. That's that. Have a good day. See you tomorrow. Good morning. One of the ways that I stay one step ahead of the herd is by out hustling them. So every single day I'm waking up before the sun, not by an alarm, but because my body wakes me up, because it's pumped to be alive. And it's looking forward to going downstairs and making content first thing. And I love starting the day and setting the intention of the day of being productive by knocking things off my checklist before it's even 8 a.m. It's really easy to have a very productive day when you're already productive before the sun even comes up. So when learning charts and technical analysis, for me it was never, I need to do this work so I can make money. It was always, I enjoy doing this and money is going to result from it. And those are two very different mindsets to be in, and you have to ensure that your goals are in line with your enjoyment if you're going to be able to do this long-term successfully. So don't forget to do good things out there. Go get productive on the day. We'll see you soon.
Shh, hear that? It's Sunday morning and that's the sound of the herd sleeping.